We received the final inflation report before the big Fed meeting next week. It's Thursday, September the 11th, and this is Markets with Megan. If you like this podcast, please subscribe, hit that alarm bell, share it with friends, family, or colleagues. We're here today to break down the economic data as we always do and what that means for the markets and as well as what it means for the upcoming Fed meeting next week. So this morning we received the August reading on the Consumer Price Index, and this is the second report that we got this week. We got the Producer Price Index, which came in better than anticipated. And at the consumer level, there weren't any major surprises, but we want to dig down into some of the other details that are worth mentioning and definitely worth monitoring. So at the headline level, the inflation rose 0.4%. That will include food and energy. And that 0.4% was a little bit higher than expected of 0.3. Year over year, inflation's rising 2.9% versus 2.7% in the prior month. And then when you exclude food and energy, that core reading, that's rising 3.1%. That came in line with expectations and it matched last month's gain. Now let's look into where this inflation is coming from. The service sector still is showing sticky inflation pressures, rising 3.8% on a year-over-year basis. The housing sector, specifically shelter, that's up 0.4 after a 0.2 rise last month. So again, a little bit in the wrong direction. Airline fares, they jumped almost 6% in August, and that compares to a 4% rise the prior month. And then you saw used car and truck tick higher as well. Now, the markets really like this reading. There's a 100% chance the Fed will cut rates 25% at their meeting next week. That's according to the futures market. And there's now basically 3 rate cuts scheduled for the remainder of this year when you look at the futures market. Now, what we're going to watch and what the Fed should be watching is really digging into that super core level. So when you exclude food, energy, and shelter, we're still seeing inflation pressures. On a year-over-year basis, that's rising 2.7%, and that's the highest annual increase we've seen since June of 2023. So there is underlying inflation pressures that haven't completely disappeared. That's not going to change the Fed's opinion. We think they'll cut interest rates next week, but we really hope that they follow that with the fact that they continue to be data dependent and they'll watch this data. It's expected to be volatile as we move into the remainder of this year, and that their inflation target is not officially reached yet, and in fact could argue that it's moving slightly in the opposite direction. Now, the markets are celebrating it today. They're up big, and that's because this rate cut is finally upon us, and this is what the market's been anticipating. We'll be back next week when we get that Fed report, as well as more information on the consumer. Thank you, and if you want a history of this podcast, you can go to marketswithmegan.fm. Thanks.